What's up guys and welcome back to Wall Street Millennial. On this channel, we cover all things stocks and investing, and today we're going to go over some of the most insane gains and losses on the Wallstreetbets forum so we can learn from other traders' experiences. First we have user Mita Chai, who posted some solid gains on Afria. He owns 1,355 shares of Afria, with an average cost basis of $10.89 Canadian dollars, and shares have more than doubled since then, sitting at $27.77 at the time of this post. On December 19th, Afria and Tilray reached an agreement for an all-stock merger that will create the largest legal cannabis company in the world. Under the terms of the deal, Afria shareholders will receive 0.838 shares of Tilray for each share of Afria that they own. Usually, when an all-stock merger like this is announced, the stocks immediately adjust to their merger valuation, such that an investor wanting to own shares in the new combined entity will be indifferent about buying either of the two stocks. But this was not the case for Afria and Tilray. After the merger was announced, their prices diverged significantly, with Tilray being effectively overvalued compared to Afria, leading to a merger arbitrage opportunity that was widely exploited by Wallstreetbets users. At the height of the mispricing on February 10th of 2021, Tilray shares were trading at $63.91. Afria shares should have been worth $53.56 based on the terms of the merger, but only traded at $26.30, representing a 50% discount to Tilray. Since the peak, Afria has massively outperformed Tilray, decreasing only 25% from the peak, while Tilray declined 60%. This significantly closed the merger gap, which now sits at just 9.7%. There is still an arbitrage opportunity in the shares, but it is not risk-free. If regulators block the deal or it does not go through for any other reason, the peg connecting the two stocks would disappear. This Wallstreetbets user apparently saw the opportunity in Afria's relative undervaluation and bought in early, profiting to the tune of $22,866, or 155%. Congratulations on your gains. Next off, we have user JR Skater, whose highly levered AMC positions turned out to be a one-way ticket to the moon. He owns almost 500 call option contracts on the movie theater chain, with strike prices ranging from $10 to $20, all with relatively long expiry dates. In all, he has made more than $200,000 in gains, which has elevated his portfolio to exceed $500,000 in value. AMC shares have been on a tear this past month, rising more than 136% as it has benefited from the optimism around the reopening and the halo effect from the GameStop short squeeze. The recent price appreciation of AMC has seemed to defy the physics of fundamental investing, with many Wall Street professionals saying the stock is almost worthless. They cite the company's high debt burden and secular headwinds facing the movie theater, with this analyst prescribing a price target of 1 cent.
The past couple of months. And I think if you look at AMC theaters, we've been looking at sort of the rise in the stock as investors seem excited by the reopening. What they're missing is that this is not Cinemark. Cinemark's actually got a very good balance sheet. AMC is 8 times levered. They will never generate meaningful free cash flow. There is no value to equity holders. People can buy it because they're excited about going back to theaters, but there is no value to this company. And ultimately, that's what's going to matter is they can't pay off their debt ever.
Most retail investors seem to disagree with this view, as evidenced by its net dislike ratio of 86%. The OP doesn't just post his gains on Wallstreetbets, he also has a YouTube channel called The Road to the Two Common Club, where he documents his investing journey. He was a high school teacher, and in 2012, he opened up a trading account with just $4,000, with the goal of eventually turning this into $1 million. Now, 9 years later, he is more than half of the way to his goal, with an account value of $569,000. How long do you think it will take him to reach his goal of $1 million? Can he do it by the end of the year? Let us know in the comment section below. Next we have user White Avid, who has not been having a great 2021 so far. He is currently down 91%, or $35,000 on his GameStop positions, and has also recognized $139,000 of losses. He's been playing GameStop calls since the first short squeeze, and has practiced diamond hands, never selling out of his positions despite having multiple opportunities to do so at a profit. He currently owns $500 strike calls expiring this Friday on March 19th. At the time of recording this video, GameStop is trading at $218, so it'll have to more than double by Friday to expire in the money. He is still holding, with the hope that the mother of all short squeezes could happen before then, but if it doesn't, he says he's going to take a break from trading for a while. But in the meantime, he is actually doubling down on his position and is currently in the process of transferring his stimulus check into his trading account to buy even more GameStop. He hopes that other investors will do the same, otherwise he will have to resort to eating ramen noodles in an effort to cut costs. We wish you luck on your position. Next off, we have user Dumbledore Roth IRA, who is a diehard practitioner of diamond hands. He profited to the tune of over $2 million in the first short squeeze, but didn't take profits and gave up all of those gains. But he didn't give up and went all in again at the start of the most recent short squeeze, which has brought his account all the way back up to $2.8 million, reaching parity with his previous high watermark. The comments section is unsurprisingly supportive of this post, and they seem to think that Dumbledore Roth IRA has the Midas touch, with any stock he invests in going up. User Deep Effing Squoze asks the OP to please buy Palantir stock so that it will go up too, and user Triton says that Robinhood should add a setting that lets you automatically copy his portfolio. User iBuck12 observes that the level of gains posted on Wallstreetbets seems to have skyrocketed this year. Pre-GameStop, the $3 million mark would be the biggest gain you could see on this forum, but now it seems like every day someone is posting 7-figure GameStop gains. Congratulations on your diamond hands. Next off, we have a triple-digit gain on an EV stock. Surprisingly, it's not Tesla, NIO, or any of the other EV SPACs, but instead it's Volkswagen, a boomer legacy automaker. Volkswagen stock has had a very volatile history. They experienced a massive short squeeze triggered by their merger with Porsche, which briefly made them the most valuable company in the world. In 2015, it was exposed that they rigged their cars to pass US emission standards tests. This was a major overhang on the stock for a few years as they faced billions of dollars worth of fines and suffered reputational damage to their brand. But more recently, it appears that the company is finally making a comeback, with shares almost tripling from the March lows. The OP bought into the stock at an average price of about $173, and shares have more than doubled since then, yielding him a $26,734 profit. While VW built its brand around the internal combustion engine, their CEO Herbert Diess understands that the shift to EV is inevitable, and he has shifted the company's focus to making cheap batteries and rolling out affordable EVs. On a recent interview on CNBC, he says VW is gaining momentum against Tesla in Europe.
But how about, you know as well as I do, there is a big company over the other side of the Atlantic which has this extraordinary advantage in terms of popular perception and the vehicles it's been building as well. It also trades at 155 times forward, whereas Volkswagen Group trades at 7 times forward as well. Can the gap between what Tesla is doing and what you and other European automobile manufacturers are doing, can that gap be bridged?
I think so, because, you know, the race is open. This is not an industry which you can conquer within a few years or so. This is not you need life cycles, you need product, you need plant capacities, you need market, you need to earn the trust of the customer. So this is a long run. And yes, there are a few startups which we are watching closely, and Tesla for sure is in the lead in some aspects there. But we are not so far behind, and we are gaining momentum.
While VW is certainly not a Tesla, this Wallstreetbets user thinks its cheap relative valuation makes it an attractive EV play for more value-oriented investors. To round it out, we have user UDHJD, who posted a massive comeback in his portfolio over the past year. He started trading options at the beginning of the pandemic, but had no strategy, and by the end of the year had lost more than $12,000. To make matters worse, he funded his initial deposit by maxing out 2 credit cards and taking on leverage from his trading app. After incurring $12,000 of losses in 2020, he started 2021 $4,000 in debt. But he wasn't about to give up. He started fresh by depositing another $1,000 he had saved up, and after having some initial success, deposited another $4,500. He read up on some day trading strategies and started implementing a scalping strategy where he would buy out of the money calls whenever the market opened down and sell them the same day, aiming to make 10 to 20% on each trade. He traded over 60 tickers, including many Wallstreetbets meme stocks such as Virgin Galactic, Riot Blockchain, Tilray, and GameStop. He posted a screenshot of a successful scalping trade on Riot Blockchain in February. He bought 20 put contracts within the 5-minute span from 1:03 to 1:08 p.m. He then immediately placed a sell order, which was executed just 8 minutes later for a small gain. He would repeat these trades over and over, usually making about 4 to 5 trades per day. In all, he's made over $25,000 with this strategy. He's used these gains to pay off his credit card bills and his margin. He now trades on a cash account that is not subject to pattern day trading rules. In all, his successful day trading strategy has taken his account from its trough of negative $12,000 P&L to over $13,000 today, and one of the Wallstreetbets forum's greatest comeback stories. While day trading worked out successfully for this Wallstreetbets user so far, it is important to note that 80% of day traders lose money. So unless you are extremely confident in your strategies, it's usually a better strategy to just buy and hold quality stocks. But regardless, we congratulate this Wallstreetbets user on his impressive gains. That wraps it up for this video. If you like this content and want to support the channel, consider becoming a channel member. Members get access to all of our non-time sensitive videos one day in advance, and will be able to vote on which topics we make videos on. If you don't want to join as a channel member, you can still help us out by smashing that like button, and you'll still get full access to all of our videos. Also, don't forget to check out our second channel, WSM Research, where we post due diligence on high growth and innovative tech stocks. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.